Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's update our view on the gold market. So you can see in general, market starts feeling some barrier on upward direction. So you could see that it's pulling back out from the overbought condition. In general, recently we've got really strong jump on interest rates in the United States. So those of you who are watching for it, you probably know that the 20-year yield, 30-year yield is already above 5%. 10-year yield 4.9, mortgage rates somewhere around 8%, so it's really very fast action, and we think that it's not the end yet. So we expect that it will continue, and that might be the additional holding factor for the gold. Although currently it's quite clear that the gold market has its own some special drivers, and it could show really muted reaction on economical factors such as interest rates. So if the escalation in the Middle East will rise, so interest rates could hold gold from the possible upward direction. Meantime, we're mostly dealing with the technical analysis right now, and from technical analysis we're mostly watching for the same scenario that we have discussed recently. So once market starts showing some reaction, let's call it as a reaction on the technical indicators, we do not have any reasons to deny the idea of the possible hand shoulders that we discussed recently. And take a look, I intentionally keep this broken confluence area. Why? Because when the market on the way up shows no reaction on the confluence area, shows no pullback, and it just breaks it up, very often disrespected confluence levels are becoming good support. So it means that when the downside action up from the current top in the way of the retracement, these levels might provide the support, and that might be the level where a particular market could reestablish upward action. So that's why the area around on average 1915, it might be useful to us and consider our market could really stop the pullback around this level. So on our time frame, 4-hour time frame chart shows us that market actually hasn't quite reached the XOP, which seems now it's a bit too far, and we're watching for a possible reaction on the resistance level in the overbought area. And here, let's take a look. We have the confluence around 1904 area, which is very close to this respective confluence on the daily. So it might be could set that 1905, 1910, 1915 area somewhere on this level might be the one that we're watching for. Is a possible destination point of the downside action. On the hourly chart, we have absolutely the same trading plan. So market has completed 161 extension of the butterfly that we have suggested yesterday, and we're still keep watching for a pattern. So it might be the hand and shoulders, for example, on something that could just put the background for a possible retracement that we're watching for. Meantime, at this point, as you can see, the market once again is forming some kind of dependent, suggesting the upward action, and it's obviously is coming not on the technical factors but on some different reasons, which is geopolitics probably, that suggests that gold could rise more. But these factors we're not considering right now, and just dealing with the technicals. And from technical point of view, current situation is not good point for taking the new long position, because you're the overbought, interest rates are rising, and on this background any bullish position might be really unstable and risky. So from the technical point of view, you have to wait for a pullback. If you have some different thoughts on the subject and you're using some different factors for analysis, and you're sure that gold will just jump and keep going higher, that's okay. So it also might be because every trader uses its own unique approach with its own factors that it's following. But we're keeping here is just general approach. That's we're using general factors and using technical analysis for making some forecasts on the performance, and technicals definitely tell that yes, we have great bullish context, we have great bullish sentiment, but from the technical and tactical point of view, it makes sense to wait for the pullback for taking a position. So that's what we have on the gold.